There are just 7 tech stocks that make up over 1/3 of the value of the entire US stock market. But not all of these stocks have equal upside in the AI revolution. So today, I'll be ranking every stock in the Magnificent 7. The S and A tier is for the stocks I'm looking to buy more of right now. The B tier is for the stocks I think are already fairly priced, and C is for the names I just wouldn't touch. And before we begin, remember this video is for informational and entertainment purposes only. These are my opinions, and my content is not financial advice. All right, guys, let's get right into it. The first stock I have for you today is Alphabet, aka Google. If there's any signal a stock is mispriced, it's Warren Buffett dropping billions on it. Berkshire Hathaway was the largest buyer of Alphabet stock in Q3, purchasing over $4 billion of it. Google stock has been on a tear, reaching all-time highs lately despite a wider tech sell-off. It went from being viewed as an AI loser to the AI winner in a matter of months, and it makes sense why. Google is the only major AI company that is fully vertically integrated and not dependent on others. It designs its own TPU chips, operates one of the world's largest cloud platforms, and develops its own frontier-scale LLMs like Gemini, all under the same roof. Another core piece of the AI boom is going to be advertising. Now, here's another reason why I think Google is so well poised to win. I think LLMs will need to integrate advertising to deliver the ROI investors are looking for. Google already has all the advertisers, and they can easily integrate them into chatbot-based search, while OpenAI will have to start from scratch. So if anyone is going to make the AI business model work, it's Sundar Pichai. Gemini 3 just dropped, and it's now the #1 AI model by 3 different ranking sites. It was even trained on Google's own chips without any NVIDIA hardware, and it was just rumored Meta is in talks to buy those chips from Google for its own data centers, which threatens NVIDIA's dominance in that category. Then think about how fast Google Cloud is getting market share. It's growing 30% year over year. Plus Waymo, YouTube, a 7% SpaceX stake, and a groundbreaking quantum lab. Google is obviously going into my S tier. I think there's a high chance this will become the world's most valuable company very soon. Okay, I'm gonna try my best to be objective here, but I've never loved Microsoft. When I was a kid, my dad basically raised me to hate Bill Gates for all the monopolistic actions he took against competitors back in the 90s. But Microsoft is a much different company these days. It's got the world's second largest cloud business with Azure and 400 million paid seats on its 365 software suite. On the AI front, Microsoft now owns 27% of OpenAI. That gives it big upside in a company that could IPO at a $1 trillion valuation, but it also puts the company in a rent versus own dilemma. Microsoft's flagship AI products still rely on OpenAI's models rather than its own. As part of its OpenAI ownership, Microsoft doesn't have a board seat. It has no say over how Sam Altman runs the company or designs its models. At a 33 PE ratio compared to Google's, which is below 30, Microsoft feels to me like it's overpriced for what it is in this AI revolution. I'm not saying this isn't an incredible business. It definitely is, but this one is going in my C tier. Now, the next stock is one I have a very strong opinion on, but you should be aware that I think the next few months of the stock market are going to be pretty volatile. Investors are looking everywhere for reasons to sell with talk of an AI bubble, but volatility creates opportunities. With Moomoo, you can trade stocks, ETFs, options, and crypto commission-free, and with pro-level tools that help you navigate the chaos. So here's some features I love that make me feel like I'm playing chess instead of checkers when I'm trading. First, I use the earnings calendar to see who's reporting and sign up for alerts so I never miss a big move. Then when I've found an interesting stock on Moomoo keys me in with level 2 market data, which most platforms charge for. This shows the real depth of the order book so you can see where buyers and sellers are stacked before a move even happens. There's so much data to see. You can look at the money flow and even track technical sentiment by the minute. Then tap into the pattern finder. Moomoo will find the high signal charts for you, double bottoms, breakouts, and trend reversals, and you can even pull up multi-chart views to compare setups side by side. Moomoo's also huge on education, so if you want to learn about all those fancy strategies that the elite traders gatekeep, this app is packed with free courses to help you learn. And here's the most exciting part. If you sign up for Moomoo using my link, you can get up to $1,000 of NVIDIA stock and 8.1% APY on uninvested cash for a limited time if you make a qualified deposit. So scan this QR code on the screen or go to the link in my description to get started trading on Moomoo. Okay guys, we're not going far from Microsoft. We are going to stay in Seattle and talk about Amazon. Amazon has actually been the worst performer among the Mag 7 this year. The stock's been flat year to date. Investors have been terrified of the impact of tariffs on Amazon's retail business, while AWS has shown signs of slowing growth. There was a glimpse of hope when the stock jumped 10% after its recent Q3 earnings, but at the time of this video, it's pulled back 13% since. At these levels, Amazon stock is trading at a PE ratio lower than Walmart and Costco, despite having way higher growth potential. I think one reason why Amazon stock is undervalued right now is that it hasn't really been a big part of the AI narrative, mainly because it doesn't have a frontier leading LLM of its own. But Amazon does own a 22% stake in Anthropic, which competes very closely with ChatGPT and is growing in some cases faster. So just like how Microsoft benefits from a special relationship with OpenAI, Amazon will have the same with Claude. But what really gets me going on Amazon is the physical logistics infrastructure that no company can ever challenge it on. Now just think how profitable and large Amazon's business will be when you combine these untouchable assets with the advent of AI robotics. Leaked memos recently revealed Amazon's master plan to heavily automate their business in coming years. This will see them avoid hiring 600,000 workers by 2033, despite sales doubling. While other Magnificent Seven companies fight to win the AI picks and shovels race, Amazon is just going to use AI on itself to get bigger and more profitable. This will transform Amazon. Outside of AWS, it's been a very low margin business, but this will make it a much juicier one. And that's what puts Amazon on my S tier, right at the top of my Christmas list. Santa, I hope you're hearing this. For our next stock, we've got to bow down to the king. NVIDIA is the most valuable company among the Mag 7, which makes it the most valuable company on Earth. Its near monopoly on AI's most important ingredient, GPUs, is why investors value NVIDIA at 44 times earnings. NVIDIA's recent Q3 results were arguably their most important ever. As fears around an AI bubble proliferated, investors were on the edge of their seats to see if NVIDIA could keep delivering massive sales growth of its AI chips. And deliver they did. GPU sales were up 62% year over year, showing the continued insatiable demand for their product. NVIDIA's stock rose by 5% after this news came out, but despite the bullish signal, it fell the next day by over 8%. I think NVIDIA stock is going to keep beating the S&P 500, but with the way it's valued, I just don't think there's room for surprises with how sky-high expectations around this company are. I wouldn't sell NVIDIA, but I also wouldn't buy more of it right now, so I'm putting it in the B tier. Next up, let's talk about Apple. I'm not going to spend too much time on this one because it's been very well documented that Apple does not have an AI strategy. To even get AI in their products, Apple is rumored to be doing a deal right now with Google. Apple not vertically integrating a key part of their tech is the antithesis of the walled garden approach that made this business so valuable. But that's not the only issue. iPhone sales are slowing down as it looks like we've reached peak smartphone. The iPhone has looked and felt the same year after year, and people don't feel the need to upgrade anymore. Apple has said they're working on smart glasses, which could be the company's next major product. Now, I will say I think there is a ton of upside there, but without the AI software layer behind it all, I'm just unsure if it could really pan out. Now, I'm not going to stop buying Apple products, but I will stop buying Apple stock. With a PE ratio exceeding Microsoft and Google, with no clear AI growth lever, Apple is going in my C tier. Okay, for the next stock, we're going to go check in with Zuck over at Meta. After Q3 earnings, Meta stock dumped. At the time I'm making this video, Meta stock is down 20% in just the past few weeks. Investors were horrified by a one-off $16 billion tax charge that decimated EPS, massive CapEx investments in data centers, and continued losses in the mixed reality division. Despite this, revenue was up 26%, and had there not been that tax event, net income would have been up 19%. After this sell-off, Meta's PE ratio is the lowest of all the Mag 7 right now, which I think makes for a great buying opportunity. First, I think Meta is going to be a huge beneficiary of all this AI spending that's happening right now. I think it's going to make their ads business way more effective and profitable than ever before with enhanced targeting and delivery. I think the same will go with growing and hooking more users as algorithms improve across its platforms. Now, that's kind of an obvious take, but I think it's actually Meta's mixed reality bet that could offer the most asymmetric upside here. For one, I think smart glasses could replace smartphones, and Meta has already sold 2 million units of its Ray-Ban smart glasses. With Meta's Llama AI model powering them, we could see Meta eventually build something that may rival a smartphone. There's a long way to go, of course, but I do have conviction in smart glasses. I already wear a pair, so I wouldn't mind if this became my phone. Now, the second take I have is that Meta's virtual reality gaming business could be massive. The video game industry is already a bigger entertainment category than Hollywood, but I think VR could grow it by multiples. With AI, the cost to create a video game or design a virtual world will drop to almost zero. Now, I don't know exactly what this future will look like, but it sounds insane. And I know it will be a massive market one day, that Meta will dominate when that happens. So Meta is going in my A tier. I think the selling is an overreaction, and this is an excellent company with some big growth prospects, thanks to Zuckerberg's risky swings. Last but not least, guys, we have Tesla. I first bought Tesla back in 2018 at $200 a share, and it was actually the first stock I ever owned. So I'm a bit emotional about this one. The last few years have been an absolute roller coaster for Tesla, though. Some see Tesla as a car company with slowing growth and increasing competition, trading at an astronomical price to earnings ratio of 270. While others see it building an army of humanoid robots and every Tesla in the world becoming a robotaxi with the click of a button. Tesla stock is basically a bet on Elon Musk's ability to continue inventing the future and basically pivoting the company away from consumer auto sales into these other categories. And given what he's achieved in the last few years, investors pay a huge premium for it, especially after his $1 trillion pay package was just approved and his focus will be on Tesla. I think that Tesla has the most asymmetric upside of all of the Magnificent Seven stocks. If there's one stock that I talked about today that will 10x your money in 5 years, I think it'll be Tesla. Optimus could be the biggest product since the iPhone. And Tesla has some key advantages over Waymo to scale driverless cars and basically win the vehicle autonomy race. With these products, the path from Tesla going from $1 trillion to a $10 trillion market cap company is clear. Tesla has factories around the world building 2 million cars a year. It's the only company in America that has the capacity to produce robots at scale, whether they're humanoids, cars, or semi-trucks. Because of all this upside I see in Tesla stock, I would never sell, but I don't feel the need to load up on more of it right now. The timeline is super uncertain around Optimus, and self-driving will continue to be a gradual rollout. I think there's a lot more investors can tangibly see and a better entry point than right now. So Tesla is going in my B tier for right now. That wraps up the ranking, guys. Let me know in the comments what you think of each of these stocks. And if you want more of the best stock analysis content on YouTube, check out this video I made about the stock I have most of my portfolio in right now. And I'm very excited, and I think you'll like the video. Thank you.